Hey everyone, today we're diving into a really interesting financial product, LIC's Jeevan Utsav Plan. We're going to break down the whole thing, what it is, how it works, and, the big question, what it could actually mean for your financial future.
But first, let's just step back and ask a question. Have you ever thought, is there a way to get lifelong security and a steady income from just one plan? It sounds almost too good to be true, right? Well, that's exactly the promise we're going to dig into today. Okay, so here's how we'll tackle this. First, the basics. What is this thing? Then we'll see how it works, look at the two big choices you have for income, touch on the safety net part, and finish up with some extra features. Sound good? Let's jump in. All right, first things first. At its heart, what is this Jeevan Utsav Plan?
Okay, so fundamentally, it's a whole life insurance plan. But you'll see these two words thrown around, non-participating and non-linked. What does that even mean? Well, simply put, your returns aren't riding the roller coaster of the stock market. They're guaranteed. You know exactly what you're getting. And that predictability, that's huge. So, what are the highlights? Well, it's got some really cool features. For one, you get covered for your whole life, but you only have to pay for a limited time. We're talking as little as 5 years. And while you're paying, the value is growing with these guaranteed additions. Plus, and this is a big one, you get to decide how you want to get your income later on. And hey, if you ever get into a tight spot, there's even a loan facility.
Okay, so we've got the what. Now let's get into the how. How does this thing actually play out, from day one all the way to when you start receiving money?
The whole process is actually pretty simple. Think of it in a few steps. You start by picking your payment term. Could be 5 years, could be 16, it's up to you. While you're paying, your policy is in the background, just growing, thanks to something called guaranteed additions. And then, after a bit of a waiting period, boom, your lifelong income starts.
So let's talk about these guaranteed additions, because this is really the engine of the plan. It's how your money grows. For every year that you're paying your premium, LIC guarantees, and that word is key, they guarantee to add 40 rupees for every 1,000 rupees of your basic sum assured. It's not a maybe, it's a promise, and it just keeps building year after year.
Okay, now we're at a really critical part. This is probably the biggest decision you have to make with this plan. You get two totally different ways to receive your income for life. And this is where you can really make the plan fit you and your own style.
So here are your two flavors. Option 1 is called regular income. Think of it like your own personal pension. It's steady, it's predictable, you know exactly what's coming. Then you have option 2, flexi income. This is more like a special savings account. You can take the cash when it's offered, or you can say, nah, let it sit there and grow for a while.
Let's zoom in on option 1. This one is all about simplicity. Seriously, it couldn't be easier. When it's time to get paid, you get a check for 10% of your basic sum assured, every single year, for the rest of your life. There's no math, no guesswork, just reliable cash.
Now, option 2. This is for people who want control. You're still getting that same 10% payout each year, but here's the twist. You can choose to not take it. You can just let it ride. If you do that, it stays put and starts earning interest. Then, let's say down the road you need a chunk of cash, you can go in and pull out up to 75% of whatever has built up in there.
And you're probably wondering, what kind of interest are we talking about? Well, it's a pretty solid 5.5% per year, and that's compounded. So if you choose to just let that money sit, this is the growth engine that's working for you in the background. Okay, so we've spent a lot of time on the life part of this life insurance plan, the income you get. But it's still insurance, right? So let's talk about that safety net. What happens for your family if you're not around?
So if the policyholder passes away, their nominee gets a payout, and that payout is made of two main things. Something called the sum assured on death, plus all those guaranteed additions we talked about that have been building up over time.
So how do they figure out that sum assured on death? It's pretty straightforward. They look at two numbers, your basic sum assured and 7 times your annual premium. Whichever one of those is higher, that's what they use. And here's a really important guarantee. The total payout will never be less than 105% of all the premiums you ever paid into it. That's a solid floor.
All right, we're almost there. In this last section, let's just cover a few other important bits and pieces so you have the complete picture.
It's always helpful to see some actual numbers. So let's take an example. Say you want a 5 lakh sum assured. If you're 30 and you pick a 10-year payment plan, you're looking at about 72,600 rupees a year. But watch this. If you stretch that payment period to 16 years, your yearly premium drops all the way down to around 30,000. So you can see how that flexibility helps.
And just like with a lot of insurance, you can customize this plan. They have these optional add-ons called riders. For a little extra in your premium, you can bolt on extra protection for specific situations like an accidental death and disability benefit. It's a way to add another layer of security if you want it. And last but not least, a couple of really practical things to know. First, there's a loan facility. So if you need access to cash, you can actually borrow against your policy's value. And second, if life throws you a major curveball and your situation completely changes, there are ways to surrender the policy. Though of course, there are specific rules for that.
So there you have it. That's the Jeevan Utsav Plan in a nutshell. How it works, what it does, and the choices it gives you. Which really brings us to the final and most important question. A question for you. Thinking about your own future, what makes more sense? The rock-solid predictability of that regular income, or the control and growth potential of the flexi income? Something to think about.